Hey, one of the biggest mistakes I see federal employees make as they approach retirement is worrying about risks they can't control while ignoring the ones that they absolutely can. Today, I want to walk you through 3 retirement risks that are fully within your control and how addressing them properly can make the difference between confidence and uncertainty in retirement.
Welcome to the Federal Retirement Channel, the place federal employees come to get retirement right.
Hey, as you move closer to retirement, your margin for error gets smaller. You're no longer just saving money. You are deciding how that money will be taxed, how it will be invested, and how it will be withdrawn to support your lifestyle for the rest of your life. Getting any one of those wrong can quietly cost you hundreds, thousands of dollars over time. Not because the market crashed, but because of planning gaps. And most people assume that if you have enough money, then retirement will just work itself out. And what I see is actually the opposite. On paper, the balances look fine, but the plan underneath is incomplete. Taxes are ignored, withdrawals are improvised, investment risk is either too aggressive or far too conservative. And this is where avoidable risk creeps in. So the first risk that you can control is tax risk. For most federal retirees, the majority of your savings sit in a pre-tax account like the TSP or traditional IRAs. Every dollar that comes out is taxable. And so without a tax strategy, withdrawals can push you into higher brackets, increase your Medicare premiums through IRMA, often unintentionally. In real retirement plans that I review, this is where proactive planning matters most. Instead of making large Roth conversions all at once, spreading conversions over multiple years often allows retirees to stay below key tax thresholds, reducing lifetime tax exposure. The goal is not to eliminate taxes. The goal is to control when and how much you pay in tax. Now, the second risk is investment risk. Investment risk does not disappear in retirement. It simply changes. In a portfolio that is too aggressive, a market downturn in retirement can permanently damage the plan. And if it's too conservative, inflation quietly erodes purchasing power over time. And what I see most often are portfolios that no longer match the retiree's timeline or tolerance for volatility. In a well-built retirement plan, the investment strategy is designed to support income needs while still allowing for growth, not chasing returns and not hiding in cash. Then the third risk is withdrawal risk. And this is one that no one talks about clearly. Taking too much out too early, especially before Social Security or required minimum distributions begin, can drain a portfolio faster than expected. Rules of thumb like the 4% rule can be helpful starting points, but real retirement income planning requires flexibility. In many plans, withdrawals are calculated intentionally to meet monthly spending needs after tax while preserving long-term sustainability, not guessing year by year and not reacting emotionally to markets. In real plans I review, these 3 risks are always connected. Tax decisions affect withdrawals. Withdrawals affect investment strategy. Investment performance affects long-term tax exposure. And this is why piecemeal planning rarely works, especially for federal retirees with pensions, TSP balances, and Medicare considerations. The takeaway is simple. You cannot control markets. You cannot control longevity, but you can control how your money is taxed, how your portfolio is positioned, and how your income is withdrawn over time. When those 3 things are aligned, retirement becomes far more predictable, far less stressful. If you want individualized help thinking through these risks, applying them to your situation as a federal employee or a federal retiree, go to christycapital.com and click Talk to an Advisor. And if you want to keep learning, I have a video right here that walks you through how taxes really work in retirement for federal employees. Check out the video. My name is Stubbs. I'll see you on the next video.